Everyone, and welcome to today's morning report on Wednesday, 4th of January with me, Richard Perry, market analyst at Handtech Markets. We've got a fairly neutral outlook on the equity markets today. There was a positive open, but that sort of slid back on the European stocks after, well, Wall Street was positive, Asian markets were positive, but sentiment has just drifted back a bit. And it's interesting that we've seen the dollar that started to correct, and that correction has sort of been driven by, I think, this sort of subdued nature of the treasury yields, really. Twos and tens just sort of not really able to make too much traction, and that is certainly dragging the dollar, I think. And the dollar is actually lower against all of the forex majors now, but not considerably, but just enough to sort of take across a bit of a corrective move in the early moves today. Gold is higher, silver's higher, and it's interesting that we saw this corrective move on oil yesterday. Sharp move into the close on the downside, about 2%, 2% on the strength of the dollar yesterday, but that's has started to unwind with this dollar weakness today. So it looks as though that markets are just taking this weaker dollar and just moving with it, certainly in the forex and commodities space. And that's pretty much what we're seeing today. But in terms of equity markets, fairly flat and neutral, and not a great deal of direction that we're seeing so far. Now, in terms of what we're looking for today, we've had the Eurozone PMIs coming out, the composite and the services and composite PMIs, and they've been fairly positive. They've beaten expectations on the Eurozone. Well, the French and German numbers have beaten expectations, and the Eurozone. And I'll show you the sort of composite PMI for the Eurozone. Actually is highest since my chart began back in 2014. So that is certainly positive. And we've got also inflation data for the Eurozone today. Now that's expected to pick up to 1% today, as the oil prices can sort of moves sort of filter through on the upside as that is happening. But in terms of your core inflation on the Eurozone, it's not actually expected to increase at all, 0.8% on the core, so that's expected to remain flat. So it's in that it will be a driver of the euro through the morning potentially, and then in the afternoon, not a great deal. You've got the crude oil inventories from the API, the American Petroleum Institute, but also that's at 9:30 this evening. But before that, we've got the Fed meeting minutes, which will be at 7 o'clock, and the market will be looking out for sort of the reasons why the Fed sort of obviously did the rate hike, but also did the hawkish move on the dot plots, which will be interesting to see. Any sort of rhetoric or any sort of talk around that, so that will be watched for today. But generally speaking, in today's session, we're sort of seeing this dollar weakness, which is sort of mildly seeing a bit of a bounce on the euro, bounce on sterling, and it'll be interesting to see if that continues. Now, in terms of my chart today, I've got the Kiwi dollar, which I sort of looked at today and thought, well, I looked at earlier as the Kiwi was basically flat on the day, and seeing this sort of corrective move in the last few days as possibility of moving to the downside. But I still think generally the Kiwi is under pressure, having sort of had that breakdown, below 69.50, which basically has been today's high. 69.51. The break below 69.50 completed this big top pattern, and sort of I still think this puts the pressure on the Kiwi to the downside. And I look at these momentum indicators and still think selling into strength is the way to go. So I reckon selling into this rally might be an idea today. I think there's a near-term sort of sell zone, you'd say, between sort of 69.20, 69.50. But again, back on the daily chart, you can see that the moves in recent days continue to fail at the old resistance. That resistance around 69.70, which was the lows from November, has sort of capped the upside in the last week or so on a few occasions, and I think that it will continue to play that way. And I think rallies are a chance to sell on this chart for medium to longer term positions on the downside. So I still think this is not going to change the outlook too much, these gains that we're seeing on the Kiwi, and I still think that there is downside to be seen. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.